Hi, I'm Brooke Thackeray. Thank you for joining me for a look at last week's market action. Just a quick housekeeping note, and that is that previously I had filmed one video that included a look at last week's market action and an upcoming look at the next week's market action as well. But I found the video was getting a little bit long, so I've cut it into two videos, and that way investors can choose what do they want to look at, last week's market action or the upcoming week, or both as well. So it's up to you, but I just want to make this a little bit better for everybody else. So if we take a look at the S&P 500, you can see here that the S&P 500 last week actually reached an all-time high once again. That's fantastic. No complaints with the all-time high, of course. We were looking at this a band that was taking place. It had broken a little bit below that. It wasn't a big concern. Now we're at the top of that band. Not a very well drawn line here, but we're at the top of that band or close to the top of the band. It can still move higher, the S&P 500, of course. A little bit of a downtick in volume on such a strong week. We would have liked to have seen stronger volume to support that, but not a huge concern when you're reaching all-time highs. And also to the relative strength index is actually diverging a little bit from price action. But as I always say, nothing wrong with all-time highs. If we take a look at the action last week for the stock market, this bar represents Friday of the previous week before last week. And then on Monday, we saw an update, Tuesday an update, Wednesday an update. Now this day, it closed lower than where it opened, but nevertheless, it was positive. Thursday it was an update, and Friday was an update. All 5 days were positive for the S&P 500 last week, which is a strong sign. Wednesday, we did see the ADP private payroll number come out stronger than expected. Thursday was positive as well. And Friday, we saw this update, and that was despite the non-farm payroll coming in substantially weaker than expected. In fact, if you actually take a look at the non-farm payroll here, you can see here that the expectation was for 49,000 jobs. Let me just get that going here. You can see here that was for 49,000 jobs. And we got a little bit bigger. That was the result, was 49,000 jobs. And the expectation was 105. So substantially less than expectations. And the other thing was that people don't talk much about was the revision was actually quite large as well. They took it down by 159,000 from the previous month. So 2 months net revisions. So weaker than expected for sure. And if we take a look here, unemployment went down from 6.7% to 6.3%. Now, some investors will say, well, how did the unemployment go down? And their expectations were weaker for the employment. But they're two separate surveys, and sometimes they don't jive as well. But overall, we can say that the non-farm payroll number was weaker than expected. In Canada, we did see a job loss of 212,000 versus an expected 40,000. Big, huge miss. But there is a caveat here, and that is that with Canada, the jobs numbers tend to be a lot more lumpy up and down, and just because you get one bad number or two bad numbers sometimes doesn't mean much. You really have to take a look more for the trend. We did see the unemployment number rise to 9.4%, which is actually quite high. If we take a look at what was taking place in the markets overall, you can see here that the S&P 500 produced a return of 4.6, just over 4.6%, and we saw the Russell 2000 come up with a return of almost 8% last week, which is just huge. Now, there's a lot of speculation in the Russell 2000. The fundamentals are actually quite stretched, and what you're seeing a lot of the Reddit crowd really focus on some of the micro caps and small caps as well. So that's really where some of their focus is, which is helping to drive this. I mean, it's also because, quite frankly, the Russell 2000, the small caps on an economic growth trajectory, when the economy is growing fast, then you actually see the Russell 2000 typically outperform and do quite well. And that's definitely a factor. Emerging markets was strong. Last week, TSX Composite was slightly below the S&P 500. If we take a look at the sectors in the U.S., energy sector, look at this, 8.24%, just huge. We saw larger than expected inventory draw of oil last week, which helped to push the price higher of oil, and the energy sector responded as well. If we take a look at the financial sector, did quite well. We saw rising interest rates help that sector. A sector tends to perform well with rising interest rates, which tends to boost the net interest margins for banks and increasing their profit overall. Interesting that the utilities, healthcare sector, and the staple sector actually underperformed overall. These are the defensive sectors. This was a risk-on market, so these sectors didn't really perform that well compared to the rest of the market. Healthcare, I'll come back to that in a second, but healthcare was quite weak, despite we saw some positive results coming out for the healthcare sector overall. But nevertheless, investors weren't interested in that sector, but they were interested in one of the subsectors, which is biotech, and we'll take a look at that in a second. Here's some of the sectors of the market. Retail down over 10% now. As I've mentioned in previous videos, in this case I'm using XRT, the retail ETF in the US, and there's a fairly large position in GameStop, so that's affecting that sector. So you have to sort of throw that result out overall for the broad sector because of such domination of that one stock. If we take a look here, interesting last week that we saw gold down a little bit, not huge, and silver down just a little bit. Silver was part of the price action. We saw a big, huge run up on Monday as the Reddit crowd piled into silver, saying, let's go short squeeze silver now. Let's move into the silver market. And as I mentioned before, maybe that can happen one day, but the silver market is much bigger and has a lot of sophisticated players in it, including bullion banks with a lot of financing as well. So it's very difficult for the retail crowd by themselves to actually go off and to really force the short squeeze for covering to push the stock, to push silver bullion prices higher. It could happen if we saw institutions get involved as well, but and really start to move that along. But that's really not what's taking place at this time. I wanted to point out biotech. Look at biotech doing quite well last week, and this really is partly because the Reddit crowd is focusing on some of the micro cap biotech stocks, and the Reddit crowd's really a little bit like the locusts that go from one farming area to another farming area and move on. And right now it's the micro caps, and the biotech is one of the areas that they've been interested in. Look at GameStop here. We never can tell what's going to happen with a stock like this. It can keep going to the moon, as they all say in Reddit. But, when it was up and a few weeks ago at $65, that seemed crazy. And then it traded on an intraday basis at $496 on an intraday basis. And we did see that actually pull back last week as, once some investors start selling out and they start to hear stories that other investors who are long-term holders have also sold, it becomes, oh, okay, well, what are we doing here? Now, that doesn't mean this is over for GameStop. I mean, we could see a bounce for GameStop as well. I mean, despite it actually ending up quite weakly at the end of the week for GameStop, but it could bounce higher again, once again, and move higher before coming back down again. It's very difficult to predict these things, and it's a crazy area to be playing in as well. And if we take a look at what took place last week, and this is really part of the shame of it, is that, this really was about the there's a lot of the political stuff that was going on. Let's get the hedge funds, the big fat rich hedge funds, and let's really screw them to the wall and get all their money and everything else. And so it became that. But really, and so you found some of the investors buying GameStop at ridiculously high prices, trying to push it even higher as well. But the hedge funds they're not just shorting the stock. There's a lot of hedge funds, a few hedge funds actually, that were in on the long position, and they're taking advantage of the retail investors pushing the stock price higher. And they're playing the trade. They're saying, while the retail investors are coming in, we're going to use our algorithms to pick up and go into that sector. And then when it starts to turn down, we'll get out. They think they might get out at the right time, but they're not going to. If you put the retail investors against sophisticated investors over the long term, you're going to see that the sophisticated investors win. And so in the end, what we did see was we saw the average man on the street, representing the average person, actually really getting hurt quite badly in GameStop. Now, there's no question there's quite a few investors that made a lot of money in GameStop when they bought it last year at $2.80 or whatever it was. But there's a lot of retail investors that are actually going to be soured from this experience as well. If we take a look at, in this case here, this was a tweet from David Portnoy, the Barstool Sports Twitter guy that's got quite a big following going here. If you take a look here, he put out this tweet saying, everybody needs to stay calm. And he says, don't sell, and he does his little meme thing. Quite a few views, 1.6 million views, huge. And if you take a look here, though, he also, on the previous week, I should say, he also came up with this meme script on taken off, I think it's from Lord of the Rings, and puts this whole video together, and it's all, showing that, the average person holding the stocks, looks like they're doing well in this parody, basically. But interestingly enough, what did David Portnoy do? He exited all his meme stocks. Okay, so despite doing stuff like don't sell, he exited all his meme stocks, and then he did come back, and this is quite a small amount for this guy because he's actually quite wealthy. He took a $700,000 position in AMC. Anyhow, so this is a crazy space to be in. And, this isn't really long-term investing, as investors are finding out. And as I said before, silver, there's been a lot of uptake interest in silver as well from the Reddit crowd. But like I said before, it's going to be very difficult to force a short squeeze on the silver crowd. Now, there may be some stronger fundamentals for silver to be higher in the long run anyhow. But it's going to be difficult for them to actually force a short squeeze. If we take a look at the earnings last week, we did see Alphabet come up with stronger than expected earnings. Now, Alphabet was one of the two big companies, and Amazon was the other company that investors were really looking at last week for strong earnings. We saw the stock market rally into their earnings. They come up with better than expected earnings, and then the stocks went up, and that's a good thing. So investors didn't sell the news, and that's what they've been doing before, and that's why the market actually moved up quite substantially last week. Is that once investors started to figure out that investors were no longer selling the news. We saw that push higher on stocks overall. Amazon as well, record profits. Their e-boom obviously is having a huge impact as well. Jeff Bezos stepping down to become executive chair was also in the news, made the news as well. But nevertheless, investors pushed up Amazon as well after that. AbbVie earnings, okay, so revenue beat in Q4. Investors responded positively and pushed the stock price up after that. Now, nevertheless, the healthcare sector overall was underperforming the S&P 500 last week. Exxon defends dividend after its first loss in decades, actually 40 years. Now, investors can't get confused with the price of oil, the outlook for energy stocks, and the current situation for energy stocks, because it could change. And if you take a look at the results, may be bad, but if you take a look, oil's actually moved up quite substantially recently, and which increases the outlook for the energy sector overall. And if you have to sort of look forward into the future, as Exxon's tried to muddle through a lot of what's happened in 2021 with some extra costs and whatnot, but it can still do quite well in the upcoming quarters. Just a note as well that the seasonal period for the energy sector starts on February 25th. Now, it can happen. It can start earlier at any time. In fact, energy sector is doing well recently, but the sweet spot for the trade really is from late February into early May. Peloton beats estimates in Q2. Interestingly, so they beat their estimates, but they complain about getting parts for their bicycles. I think a lot of these bikes are, a lot of people have them say they're great and everything else. I think that some of them actually, once this is all over, may turn into a laundry rack, like typical exercise equipment. But we'll have to see. That's not a position on the company at all. I'm just saying on a personal level, I think that we may actually see that take place. But they did see their actual supply chain forecast saying, we're being hurt by supply, and investors didn't like that and pushed the stock down the next day. We did see oil inventories fall by 4.3 million last week, and that really helped to push the price of oil up as well. Canada Goose, okay, last week skyrockets as results exceed expectations, and this was a bit of a short squeeze as well. Because there was a fairly large position on Canada Goose, and the earnings came out, and they were quite good. I mean, there's some negative stuff in there, but overall they were quite strong. And what you found was investors were forced to cover their shorts as the stock price moved higher, and Canada Goose actually did quite well. BEC talked about spend of $1 billion for 5G as well. And on an economic front, we did see the Italian president has summoned Draghi, and what he's looking for is for Draghi to actually set up the Italian government. Now, I'm not sure what's going on with all the previous central bankers coming in and taking positions in the government as well. This is sort of like old rock and rollers coming back for another tour or something. It's kind of crazy as well, but nevertheless, it is something that is happening. If we do take a look at interest rates here, finally to finish this off, we can take a look at interest rates last week now, because interest rates are actually a key driving force in what's happening in the marketplace here. We can see here that we're still in that channel, but look at the price, look at the action here that we've seen recently. We saw an uptick last week for interest rates. We saw the 10-year, this is for the 10-year U.S. Treasury note, close at 1.19, and look at that action overall last week. So that's why we saw some of the financials do well. We saw some of the cyclicals do well. At the same time, this is a little bit, investors are taking a look and saying, hey, the reflationary trade is coming back as interest rates rise. But really what we want to see for confirmation of that is a breakout above this channel for that to be big time. It's quite a ways away from here, or on the downside for it to flip back down. So we're right now in the middle of the channel here. Looking for price action as well. Overall, last week's price action in the market and the way that investors were reacting to the market was actually quite positive. Thank you very much for joining me today.